S&P 500 just dropped hard. But this is not normal selling. Smart money is making a move right now, and if you miss this, you could lose big. Right now, S&P 500 is trading around 7,380 level, down more than 2.6% in a single move. This is not just a normal pullback, this is a strong rejection from the premium zone, which already gives us a bearish signal. When the S&P 500 starts going down, many people assume that all stocks will crash equally. But that's not how the market really works. The S&P 500 represents the overall health of the U.S. stock market, so when it drops, it usually signals broad selling pressure driven by fear, institutional activity, and large fund outflows. As a result, most major stocks tend to move downward due to strong correlation. Companies like Apple, Microsoft, and Tesla often decline along with the index during these periods. However, not all stocks react the same way. High growth and high beta stocks usually fall much harder than the overall market. For example, stocks like Nvidia and Meta are more volatile, so even a small drop in the S&P 500 can trigger a much larger decline in these names. This is because they are often more sensitive to investor sentiment and are heavily traded. On the other hand, defensive stocks tend to perform better during market downturns. Companies like Coca-Cola and Procter & Gamble provide essential products that people use every day, regardless of economic conditions. Because of this, their stock prices usually remain more stable even when the broader market is falling. Another important concept is sector rotation. When the S&P 500 declines, money doesn't simply disappear, it shifts. Investors often move their capital from riskier sectors like technology into safer areas such as consumer staples, energy, or commodities. This means that while some stocks are dropping sharply, others may hold steady or even move higher. Finally, during sharp market declines, retail investors often panic and sell their positions, which can push prices even lower than their true value. This overreaction creates opportunities for smart money and experienced investors to step in and buy strong stocks at discounted prices. So, when the S&P 500 goes down, it doesn't mean everything is collapsing. It means the market is shifting, and understanding these scenarios is the key to making smarter investment decisions.